The International Monetary Fund, or the IMF, Tuesday reversed Nigeria's economic growth projection to a negative 4.3% for this year from its earlier projection of a negative 5.4%. The fund also projected that Nigeria's economy will grow 1.7% next year from its projected decline of 4.3%. The fund in June this year had projected that Nigeria's economy will fall by 5.4% due to the coronavirus. That's the COVID-19 pandemic. Joining me to discuss this projection in relation to investment appetite for Nigeria is Kiros Gulbet, the CEO at FAYA Media. Good morning. It's good to have you on the show this morning, sir. Yes. So, good morning. Gulbet.
Good morning. How are you doing?
I'm good today. We can do a whole lot. What are the merits of these projections by the IMF?
I think the adjustments are warranted given that the worst of the COVID-related downside hasn't materialized. Therefore, I do see sense in adjusting them. That being said, it might be a bit too premature also, given that there might be a second wave to the COVID pandemic.
So what are the direct investment implications of this in the country, given the recent economic realities because of the pandemic, global pandemic, and the current and the ongoing NSAS protests across Nigeria?
Fundamentally, uncertainty, as you know, is not ideal for any investment climate. It tends to spook investors not knowing what the realities are on the ground. But the fundamentals still hold true. I think it depends on the type of investor. But if you do believe in the fundamentals, we still have the fastest rise in middle class, a massive young population, and still a lot of infrastructures to be built. I think for us, COVID has just exposed a lot of those weaknesses, which I personally believe the NSAS protest is really tied to other fundamental structural issues, and it just serves as a trigger. But for investors that have already studied the market, believe in the fundamentals, I think they will come back. It's a question of when, and a huge part of that has to do with some guidance and certainty that needs to be provided both on the fiscal and monetary side of the policy.
So, having been in the investment space in Nigeria and sub-Saharan Africa, what trends have you seen changing in investment behavior over the last few years, and what dictates that particular tone of investment?
So personally, what I've seen is there's a significant amount of interest in terms of the asset classes available for investors to deploy that capital is somewhat limited by the lack of intermediaries available to connect them to those investments. To kind of break that down, what we have now is, a lot of the easy pickings are done. What's left now is there are a lot of SMEs and, obviously startups and on the tech side, but also in different sectors in agric, but helping those companies connect with investors and working with intermediaries, either be local investment banks or specialized boutique places. That's something we've seen kind of trend up. But outside of that, I think what's really keeping the investors away from coming in again is obviously the FX instability, not knowing how to exit the market given the different restrictions that tend to be arbitrary from CBN.
I know we know quite a whole bit of issues around the FX, as you rightly said, exit the market. But in terms of approach, what approach are Africa-focused investors taking towards risk mitigation for unforeseen events across different sectors, just as we have? This is an unforeseen event in Nigeria when it comes to the NSAS and police brutality protests.
So fundamentally, the best way to hedge those issues is to essentially do a significant amount of due diligence and finding the right companies and people to invest in. The truth of the matter is there's no true hedge you can put on social uprising per se. Historically looking into things that have happened in, say, Egypt, most recently in Ethiopia, these type of movements tend to be somewhat unpredictable in what the cause and effect is. Being that it's in the very early ages of it, it's hard to predict, but most investors that I've talked to are focused on, again, what they were doing prior to this, finding the right companies, the right management, the right people that will help them navigate through this.
Okay, so if you're bullish on Nigeria right now, what sectors would you like to put in your investments? Whether you're waiting for the COVID-19 to subside, whether it's a second wave. Give me $100 million, for example. Put it in Nigeria for me. Tell me where you're going to put that.
So I think infrastructure as a whole is a great opportunity. Either it be infrastructure on the payment side, infrastructure on the tech-enabled solution, agric. Fundamentally, I think personally, I still like the ICT sector, especially within media as well. I think a lot of people haven't put a lot of emphasis on those other sectors. The last few years, they've been a lot of appetite, somewhat tailored to just fintech. And as you know, recently we had a very successful exit, which should be ideal for the market. But personally, for me, I would go long on the media, tech, and agric. It's just a bit harder to deploy the capital for the agric projects.
Yeah, I'm sure you're keeping your eye on Netflix quarterly earnings tomorrow in the US, so I'm sure you'll... So media, entertainment, ICT. What more would you like the Nigerian authorities to do to accelerate, to really catalyze this particular sector with so much of the youths and others going into this particular area that you need to catalyze, whether you're doing the fourth or you're doing the fifth industrial revolution? Right.
So I think first and foremost, loosening up the credit metrics or the credit controls to enable the SMEs to grow. A huge barrier, for any business to grow, especially in Nigeria, is access to capital. If you're trying to go, to your local bank and borrow, it's really asset-based borrowing. So, and usually, if you have the asset, the asset base, you need to, post up as collateral. You don't. You tend not to need that type of capital. So for us, I think what we hope will be ease of doing business, access to credit, and also just consistency in terms of policy. I can tell you, whenever there's FX restrictions, how to source dollars. If you have a lot of your infrastructure payments, for example, that are dollarized, it creates quite a bit of stress and makes it exceedingly unpredictable.
Well, thank you so much for your time today, for coming on the show. Gulbet Kiros, CEO, FAYA Media.